Netflix had a tough first quarter. It reported the first drop in subscribers in almost a decade. Look at this chart. We can see how the number of subscribers grew and grew and grew, and then in this quarter, it dropped by 200,000. They expect it to drop by a further 2 million in the upcoming quarter. Now, why is that? It's partly to do with the end of lockdowns, people not having as much time to spend in front of screens. It's partly to do with inflation, with not as much discretionary spending, therefore people cutting back on their Netflix. It also has something to do with Russia, where Netflix has pulled out of. But it does have implications for the streaming industry as a whole. Look at this chart. It's the price to earnings ratio for Netflix, Disney, and Paramount. At the top line, the white one for Netflix, you can see it used to trade at a massive premium to those other companies. Now, Disney, around the end of 2020, pivoted towards the Netflix model. It was going to double down on Disney Plus, focus on being a growth stock. That means investors value it based on how big they think it's going to be at some stage in the future. But if you are a growth stock and growth slows, you get punished by investors. And so you can see here the white line of Netflix crossing below Disney as a valuation multiple. Now, what can Netflix do to reignite growth? It basically has three tools. It can try to add more subscribers. That's clearly a struggle at the moment. It can increase prices, also maybe a little bit difficult given the inflationary context. And the third thing, and that's what it is doing, it is talking about advertising and introducing an advertising funded tier. Now, the advantage of advertising is it might only cost the user a few dollars, but the upside of what you can make from advertisers themselves is almost limitless. You think about Facebook, which makes something like $130 a year from advertisers per user in the US. That's the growth strategy now for Netflix as it really struggles to add new subs.